welcome. So right now we've just arrived at the first trading event. We've got such a nice venue. Have a look at this place that we just got. So yeah, today there'll be around, I think there's around 10 people that are showing up for this. I just wanted it to be nice, not too many people. Have a little trading event, talk about trading, then we'll be doing some live back testing. So yeah, this was only open to some of the trading course members. I didn't want to open this to the public, but maybe in the future I'll be doing something where, you know, anyone can join even if you don't know the strategy. So make sure you stay tuned, hit the like button, subscribe, and let's jump straight into this video. For a reversal, for example, then I would want an SMT a lot of the time. Yeah. But if it's like a perfect trade, with swept liquidity, but it might not have an SMT and it's towards my bias, then I might not care about it as much as
strong displacement.
Exactly, yeah. But looking for reversals, then definitely.
Would that be a minor SMT as well? That one and that one, because that one quite hasn't swept.
If we're looking at the low, it's hard to tell because I can't draw a line here, but let me see.
There.
With that and that one.
No, the next one.
Yeah. Because that swept that, so that'll be a bullish SMT.
For example, you might have one day where you make $1,000-$2,000, then the next you might make 500. To continue that, you need to make consistently over a long period of time.
With Top Step or with Apex?
Apex.
Oh, with Apex, yeah.
So you can't make like a grand one day and then £100
You just
next.
need, it's something like, it's just consistency over, you can't make like, you can a bit, it's like you can't make 5,000 one day and then the rest making like 200, 200, 200, 200. It's more on that level.
Just to try and get to purchase.
Yeah, basically.
So it's going to take you longer to get that
It's the
consistent.
30% consistency rule.
I didn't realise it, no.
So if you do have a one amazing day, you just need to make more money basically.
Yeah, but so that's we're doing prop films, that right?
Yeah,
We'll go back to that.
Alright. If they are just further apart, it's because they're normally on a higher time frame then. So if you have equal lows like this is the 15-minute time frame. If we have equal lows on, let's say, the 15-minute or the 1 hour that are further apart, then they are the strongest type of equal lows or equal highs. So a lot stronger than stronger than this. But even these, they're a lot stronger than this because this is on the 1 minute. So these are all the equal lows and highs I just shown again. These are technically still equal highs. Like they are a bit stronger, more stronger draw liquidity than if it was just a swing high. But again, I wouldn't be too interested in these like I would be these equal highs, for example, or even these equal highs.
There's two candles going down there, yeah? Yeah.
In here?
No, left. Yeah. No, left again. Those two.
Yeah.
And then there's a new one just before it.
Before?
Yeah. Would you consider taking that as a buy to go to the thing at the top?
From the
from
candle
this one,
Yeah. Would you is that something you consider doing?
Um,
Or what would make you not take it?
So right here, a good question. Good question. So
It technically fails. Close back a lot.
yeah, this technically has. Yeah, so obviously this is going off like no context or anything. The one thing I'd say about this is it's a bit rangy here. As you can see, like the candles there. This isn't really the type of price action here I would preferably want to see before we inverse it. For example, if we're looking at this inverse here that did work compared to this, if you look at one, the displacement candle here is a lot better. So no, it's definitely, this is something I'll talk about again in a few slides. It's the quality of a setup. So for example, this quality of this setup is not as good as this, I would say. I mean, it's not the best example because we have equal highs there, but with this price action here. So this might be a trade that you can still take because, I mean, at this point as well, we wouldn't actually have the equal highs there. So I'd say, I mean, it is a trade that you could take if you're more bullish, but if you were to take this, I wouldn't go in too strong. I mean, we have swept southside liquidity. It's an okay trade, I would say. But in a minute, what we're gonna do is I have like 15 trade examples. I'll put them all up on the screen, or I'll send you guys a link if you have laptops. You can look it on your computer, and then you'll talk to the person next to you, and then go through different trades. So that'll be very useful in a second.
The better trade you said on that.
Yeah, I'd say that
So you've closed the candle and then you've gone to the two candles across. So you haven't swept any liquidity or anything, but then it's put in another equal high.
Yeah.
Would that put you off the trade? Even though you're in the trade, would you be more cautious about could come back 10?
You just have to stick to the strategy at that point. Like I wouldn't change anything. I would never like exit out of the position. We have a news high right here. Let's say that this is the news high candle. On a trade like this, as you can see, the risk to reward is not good to this news high, to say that. But as soon as we inverse this fair value gap here, this bearish fair value gap, we swept liquidity there. We have such a high chance of going to this news high. So this would be a trade that I would potentially take, but I would just move my stop loss to break even 100% of the time once we take this news high. Now, I'd say this is one of the most important things with this strategy is your break-even point when you're entering into a market. Because a lot of the times you will get a stop to break even, but then this is a trade where, I don't know, maybe half the time you get stop to break even, but the other half you'll just get a crazy good risk reward. As you can see, we ended up shooting up. You just did get stopped out to break even. There's nothing you can do there. And once this does happen, because this will happen with trading, especially with this strategy, I know all of you know it, but never ever try and revenge trade. Don't randomly. Actually, looks like there is some.
Yeah, that's what I say. Would you re-enter that?
Yeah.
That wasn't even that bad.
Yeah, but that actually looks really. I didn't even see that till now.
That's a beauty.
Yeah, so probably would enter there again. Nice to space, and I don't actually see that till now.
So with your man, because you know when your fair value gap, well, say that candle's suddenly made that fair value gap
The bearish.
massive. No, the trade you've got on the screen.
Yeah.
So the candle close, the gap's what, 20 points.
Yeah.
Your candle close nearly made it 40 points.
Yeah.
How do you? Because you say, oh, you just have to manage your risk. But say if you've set up for a 20-point candle and suddenly it's a fucking 40 on the close.
Yeah. So.
Like, I just will not take the trade because suddenly I've got a 40-point risk.
So what are you trading with, minis or micros?
You on 5 micros at the minute.
Oh, you changed that because before you used to whack on one
minute.
Yeah.
So it's just easy maths. It's, you know,
Yeah.
It's 20 or 10
So
pounds.
this,
But you base on the measure your fair value gap, so you base on this.
yeah.
And then
How
suddenly
much
it's
it will
doubled.
Yeah.
So-
So
Give you another 30% or 40%
yeah.
candle. It's hard to.
With that point, I'd say when you're managing your risk before the trade happens, you obviously you don't want to do it from like the fair value up here because you're not going to get a candle close there. I'd say around this is a bit of a strong candle close. I agree with you, but normally I'd manage my risk from around like the middle point of this fair value gap.
So
And
I wouldn't have took it on that close. I'd have hoped for a retracement
yeah, fair enough.
because that scared the shit out of me taking that.
Yeah, no, and again, everyone will have a bit of different rules, so if that's something, then that's literally completely fine, just if you're not. But at the same time, let's say you enter five micros,
Yeah.
you can just go to 3 micros, quickly change it.
Quickly takes off.
Exactly.
Okay.
As long as you're managing your risk, it's the same. And that's the main thing, it's good that you're not just entering still, because as long as you're not over-risking, that is one of the most important parts. What we're looking at here, guys.
I would take this personally because there's an S&T and there's clearly a lot of bearish fair value gaps to the left, so I'm guessing ES is obviously respecting them on a higher time frame. We had, what's it called?
Does it matter if we inverse this one? Or this is too small?
So for long positions, so for shorts, for the context, so that's something that you could look at. I wouldn't necessarily say that's less of a reason to enter a trade necessarily, but I would just say it would be a lot better if we respected it. Do you get what I mean? So if we did respect it, then it'll be like, okay, we're respecting it. We could come down even more. We have the SMT. Yeah, exactly.
I would personally take these.
Nice displacement as well.
Yeah, nice displacement and good break-even point.
Yeah, very nice. And you could even, again, depending on your risk, you could move break even there because that's a nice point. Yeah, literally. So yeah, no, that is a nice trade. Yeah. Guys, what I will say as well is, with all these trades, obviously you don't have ES contact, so look at these like it's following your bias. So let's say that your bias is the direction of the trade, just to make things easier, basically.
This one, yeah. So you've got the SMT, respecting the bullish
Would you take this one? What are you thinking?
If there's no other gaps in here, like time frames,
Yeah.
maybe, I think I would. I don't know, I feel like you should have done it. I know criticism, this is constructive. You should have shown us without that.
Yeah,
and
I
the
know.
next slide.
Yeah. Do you know how I was thinking
You
that?
can say it in hindsight,
I know, but the thing, but some of these, I've done it so it hits take profit, but some of them are just not a good trade to take. But this is I would say this is a good one.
Like that one, like
Exactly.
That one that we said, so that one's a nice thing.
Yeah.
That's nice. Yeah, this one's nice. Yeah, I'd say this is actually really nice because obviously you can even break even there, take profits there, hold fire, have the SMT.
Holding that little gap as well, which I like. These, I retrace, holding the gap.
Yeah, contacts. Yeah, that looks like a pretty perfect setup.
Pretty nice close. Easy break even point.
Swing high point there, I don't think and just stay with us. Once it's hit the high, just move and start to there.
Yeah, that's pretty good. This is the one that I spoke about on the.
I don't know.
Would you take that back? Would you take that?
I don't think I would.
Yeah, I wouldn't. From looking at that, the only way I would here is if we had ES, and let's say I was looking at ES here, and ES had a very nice candle. Is it touchscreen?
Yeah.
I just don't know.
I know, very nice. So ES had a nice candle close above it, and I had a strong conviction.
So if ES had a strong displacement up,
Yeah.
that gives you
I
more.
might enter the candle you said, but only if there's equal highs.
Yeah,
That's it.
yeah. So that's what. Yeah, I would if I'm looking at this, I would most likely enter there, and then I'd probably get stopped to break even on this trade. So this is. Oh, that's right. Yeah. I'll squeeze in here.
What we're looking at, we were saying that I wouldn't take it.
Yeah, so do I, because of the fair value gap.
Yeah, I'd say the only thing with this one, the only way that, I mean again, it's the safer option would probably be not to take a trade here, but the only way that you could take a trade is, because we have technically inversed that fair value gap, so if you were to take a trade, just as long as you move in, stop loss to break in, yeah, exactly. But that, even if you're doing that, that is a lot more risky. Yeah, I agree.
You always go for the first fair value gap rather than the second.
Yeah, so I would much rather, if that got inversed, then I would more likely take a trade.
Would you take it from here?
Let's have a look. Yeah, I mean, that doesn't look like the best candle close, but if we got like a strong displacement candle up,
What if we swept this low?
yeah.
That would be more.
In a way. I mean, it'd just be extra context, so because we've already got a bullish SMT here, it doesn't necessarily matter. I mean, yeah, no, it would be better. It would be better, yeah, because it would be just more liquidity, but yeah, it's not something I'd be too concentrated on, but it definitely would be nicer, for sure.
Because it's still like trending, it's not like a little swing.
Which one?
It's not like this.
I said I'll take it because of SMT.
Yeah.
And you said because the candle is closed too lightly, yeah?
Yeah.
Too close.
Yeah.
For me, the candle is strong because it's.
Yeah. So I agree with both of you in a way here. So I'd say the candle close isn't the best, but then at the same time,
Close of candle is in best.
yeah.
As a strong of the candle.
Exactly,
is
yeah.
strong.
So there's nice displacement there, but again, with your point, it's just not the nicest. It's not the nicest close. I'd much rather it be where that little line is, for example.
So even with strong displacement, if it's close.
Yeah, I mean you can again, especially if there's a bearish SMT, if your bias was short, nice displacement, then you definitely could. But it would be better with.
Would it be better even if we swept this high?
I would rather
and EOS high.
I would rather an SMT than the liquidity sweep.
SMT is now because EOS swept.
Yeah.
If we sweep here, would be stronger.
See, I'd rather have an SMT than have a liquidity sweep. So I'd much rather have an SMT, so ES on Nasdaq sweep, than just having a liquidity sweep. Do you get what I mean?
Because if we sweep here and EOS don't, we still have SMT and liquidity sweep.
See, that doesn't matter then, because we have that. So it doesn't matter if Nasdaq or ES sweeps the high or low.
Because we trade here on this chart.
Yeah.
So
Yeah, I get what you mean, but that doesn't matter. But if there was no SMT, then you'd want it to sweep. Yeah. What are we looking at? It's just not working.
We're on 5 at the moment.
Yeah.
Right, so this one,
the candle to get further down.
it's a strong candle close, but you don't have a 1-to-1 to the intermediate low. That's one type.
You take profit.
Well, you've got very low resistance to liquidity there.
Yeah.
I would maybe put my stop loss to break even straight away and chance it.
Yeah, that's what I would personally do here because it's a very nice candle close, nice displacement. So a trade like this, we have the SMT, swept the liquidity, nice low there. So stop as long as you're moving your stop loss to break even. As soon as we swipe that, then I'd say that's good to take that in my opinion.
Do you put it bang on your entry? Do you give it yourself a few points?
Not a point, like less than a point.
Less than. Because otherwise you can't see the one, can you?
Yeah, you can't actually see like the amount as well, can you?
I mean, see it down here, but I like to be able to. I'm scared I'm going to press the wrong button.
Yeah.
So this one we had as a no trade because we've got this FEG there. It can't.
Yeah.
But if it cleared that FEG and closed above.
Yeah, that would be better. The only thing, that would definitely, it would 100% be better if we inverse that one as well. But the one thing I'd say about this is it would be a lot more risky, but this isn't the best example, but you could enter there as long as you're moving your stop loss to break even there. Yeah. Because then you're respecting that fair value gap.
Does this noise put you off trading into that noise?
Not necessarily because we're a bit lower. I mean, not really, no, not here, because we have nice liquidity levels still. And this doesn't look like, it's more of a range that puts me off than consolidation, if that makes sense. So a range would be if we're like just going like that. But from here, I can see that we've came down, and this is just a bit of consolidation. But yeah, no, very nice there.
This one, so it's coming off an FEG.
Yeah.
You've got SMT there. You've got I don't like it's inverse that, isn't it? Yeah, it's inverse.
Yeah, but if you look below, we're expecting another one right below that.
So that's the breakaway gap, isn't it? That's the breakaway. So here, I don't like how it struggled. Plus, there's not a 1-to-1. It went on to smash it, but.
But when you put that as your first liquidity,
you put that as your first take profit.
That one.
Yeah.
That's your.
That'll be my first take profit there.
So break even there.
I'll do break even. I mean, it depends. Break even most likely here, and then just let it run. I mean, it depends on your conviction, but most of the time, I'll probably move my stop loss to break even here, and then just let it run. But there's a high chance that it will
stop out.
Yeah, a lot of these times these might get stopped out, but behind this there's a lot of context. So I would say I like how we're respecting that fair value gap, and then bullish SMT. We're also respecting these bullish fair value gaps.
Could you please introduce yourself?
So my name is Frankie Ditchinson, 20 years old, from Liverpool, currently living over in Spain, and basically trading full time with Louis' course.
And how did you find the event today?
So the event today, from my original expectations, what I had was we was just going to come here, we was going to have a little meeting and stuff, and then obviously go through a bit of back testing. But the stuff that he went through with us was the stuff that I think everybody in the event was struggling with on the charts, like for example the internal liquidity, stuff like this. The main points what we really needed to focus down on. He really made sure that we got a full understanding of it.
Would you recommend one of these events to a friend, and would you attend another one in the future?
Yeah, well, the next event that there is, I'm 100% going to be attending it, and I've got one friend who trades with me. I'm going to be bringing him over with me, as I could not recommend it more than enough, as Louis is proper professional, and was the best of his ability.
Could you please introduce yourself?
Hi, my name is Arjan. In the Discord, people call me UG.
And where are you from? How old are you, and how long have you been trading?
I'm from London. I've been trading for 5 years on and off, but since taking Louis' course, I've been doing it full time. I've recently quit my job to go full time trading, as I've seen consistent profits since taking the course.
And what did you find most valuable about today's event?
Just the organised get together, asking Louis questions, going through chart work and seeing what works and what doesn't really.
And finally, would you recommend the course, and would you say the course has been one of the more valuable things you've done during your trading career?
Yeah, definitely. I mean, it's not expensive at all. It's only £400 at the moment, and it does provide a lot of value. for me, initially, I wasn't consistent enough to be trading profitable, but since taking Louis' course, it has actually helped me become consistent.